Donald Trump has done it again. The stock market is completely red and the trade war goes into the next round. Investors are nervous and uncertainty drives the market. But moments like these are sometimes the best opportunities for long-term investors. In today's video, I will show you 5 stocks that I'm planning to buy in April 2025, especially if the market continues to fall further. All of the 5 companies are high quality companies with long-term potential, but I will also walk you through the risks that you need to be aware of. But before we start, make sure to understand that nothing I say is financial advice in any regard. I just share the things I do publicly. If you are new to the channel, I cover stocks, crypto and macro trends. If you want to stay ahead of the markets, make sure to hit the like button and subscribe to my channel. So before we talk about the 5 stocks, I want to share with you very quick what I'm doing right now. So I started to invest in crypto a few years ago. I thought that Bitcoin was digital gold, but a couple of months ago, I changed my opinion on that. And at the beginning of February, I sold my Bitcoin position completely at around 97,000 US dollars, and my average entry price was 30k per Bitcoin. So I sold my position completely, and I'm planning to allocate and already started to allocate this money into my long-term stock portfolio. So this is not for short-term trades, it's for long-term investing. So consensus, in my opinion, in the markets right now is investors are not completely pricing in the tariffs that got announced. Why do I say that? Well, let's take a look at the stock market. Let's take a look at the S&P 500. From all-time highs, the S&P is only down 12%. And if tariffs of 50% or even more for some countries, for some of the most important trade partners of the US like China, Mexico and Canada are taking place and going to last for several months, a 12% drop in the S&P is definitely not enough. So right now there are 2 main scenarios that are possible. First of all, if the trade war continues or gets even worse, the market will go down even more, in my opinion. The Trump administration made clear that they are not focused on the stock markets right now. They are only focused on the actual economy and trade policies with trade partners. So in my opinion, the S&P could easily drop another 10% if things continue to be as bad as they are right now. And another important point is that the Trump administration tries to get the 10-year treasury yields, the long-term yields down. How are they doing that? They want investors to leave risk assets like stock market and go into bonds to move the long-term yields down, because they have to refinance huge debt this summer and they need to do that at a cheaper interest rate. So they are definitely not afraid of a lower stock market right now. The midterm elections are far away and they can continue this course for another 1, 2, 3 months, in my opinion. But the second scenario that is also possible is that negotiation will lead to lower tariffs and the market sentiment could turn very quickly. Then the market could turn around to the upside, especially if other countries remove tariffs. So let's start with the company that I'm willing to buy shares of in April. And the first company is Apple. So at current prices, Apple dropped around 22% from its all-time high, and Apple is producing mainly in China. And of course, the announced tariffs on China are very high. And if they would stay at this level, I believe that Apple could drop at least another 10%. And if the price moves into that green box right here, I would start allocating money into Apple. But of course, I'm definitely very careful here, and I'm not putting all my money in it at once. So why am I going to buy shares of Apple? So Apple is one of the strongest monopolies in the world and customers stick with their products. Apple services are also growing in revenue. Apple is also getting involved in AI. Another important point to mention is that the biggest holding of Warren Buffett is Apple. But of course, there are definitely some risks as well. First of all, the tariffs, they are highly dependent on China. And another problem for Apple is that people tend to wait longer until they buy a new phone. So let's go to the second company, which is Alphabet. Alphabet share dropped around 27% from its all-time high. We are at $150 right now, and I would buy more shares if we would drop in that green box right here. In one of my last videos, I already talked about Google, Alphabet and Amazon, and I rated both of these stocks as a buy. Google at the price of $163, and I said that I would allocate up to 7% of my stock portfolio into Alphabet shares, and so far I allocated 45% of those 7% into the stock, and I would still rate this stock as a buy. So what are the benefits of Alphabet? They have consistent cash flow from advertising, which is still growing, even though large language models like ChatGPT are around for 2 years now. Alphabet is also investing in AI to be able to compete with other AI companies, and the PE ratio of Alphabet is currently at 18, which is definitely historically very low, and that is also the lowest PE of all the Mag 7 companies. So what are the risks for Alphabet? Of course, the ad market could weaken if the economy gets worse, and the biggest risk for Alphabet is the rising competition with AI, and of course tariffs, which affect the stock market as a whole. The third stock is Nvidia. Nvidia dropped around 33% from its all-time high in December, and I started buying a little bit of Nvidia today. But of course, I definitely see that further downside is possible for Nvidia as well. If we continue to drop within this green box, I want to allocate more money into shares of Nvidia. So Nvidia is the leading hardware AI company, and of course, I mean, most people would agree now that AI is the big thing for the next decade, and AI hardware is going to be needed more and more every day, especially when companies start to produce humanoid robots. I really appreciate the pullback of the share price for Nvidia, and I see that as a great entry for my long-term portfolio. Of course, the valuation is a little bit high, and we are betting on big growth when we buy Nvidia shares. There is also high competition in the AI space, and of course the tariffs affect Nvidia as well. Next up is Amazon. Amazon dropped around 26% from its all-time high. The PE ratio right now is 32. I started buying Amazon slightly below $200 during the last weeks. I want to allocate up to 7% of my portfolio into Amazon, and so far I allocated 20% of that 7%. And today on Friday, when the market opens, I'm going to buy a little bit more of Amazon, and if we drop further within that green box over the next couple of weeks, I will definitely buy more of Amazon shares. So Amazon is more than just an online retailer. Amazon Web Services, their cloud business, is a major profit driver, and Amazon Web Services is growing despite high competition. Amazon is definitely one of the strongest monopolies in the world, and another segment for Amazon which is very important is advertising, and this segment is growing immensely. I definitely think that Amazon will be around in 10 years from now, in 20 years from now, and that is why I'm willing to buy Amazon shares. Of course, tariffs impact Amazon as well, because many people are selling products from China through Amazon. If we would go into a recession, that would hurt Amazon as well. And last but not least, Nike. Nike dropped 30% since the end of February, and after the tariffs got announced, Nike dropped more than 10% in a single day. So last week I published a video where I talked about Nike. Nike closed at I think $63 on Friday, and I told you that I'm willing to allocate up to 1% of my total portfolio into Nike, because I believe that the company can turn things around and that Nike is likely to be around in 10 years from now. But I also mentioned that Nike could be under pressure because of the tariffs this week, and this is exactly what happens. I mentioned in the video that Nike could drop into the 50s, and I told you in the video that I have only allocated 1/3 of the money that I'm going to allocate into Nike so far, and that I'm probably buying more if Nike drops in the 50s. So right now Nike is trading in the $50 range, and tomorrow when the market opens, I'm buying Nike carefully. But honestly, right now Nike got hit very, very bad, as many other retailers. Nike stock could even drop below $50. So tomorrow I might allocate more money into Nike, so that I have allocated 50% of the total amount that I'm willing to allocate into Nike. So Nike is definitely one of the biggest global brands, one of the most recognizable brands in the world, and they definitely have growth potential for the next few years. They have to change some things, but they have a new CEO, and I believe that they are able to turn things around in the future. But of course, it's definitely a little bit more risky trade. They have definitely high competition with companies like Adidas, New Balance, Skechers, and the tariffs for Asia are hitting Nike badly. So to sum it up, in times of geopolitical tensions and economic uncertainty like the new Trump tariffs and possible trade war, it is crucial to focus on high quality stocks and of course with long-term upside, especially if the market keeps to go down even more. So I would definitely say be greedy when others are fearful. But I also have to say that I'm not going to try to pick the bottom. I believe that things can get worse over the next 4 to 8, 12 weeks, especially over the next 4 to 8 weeks. I definitely believe that it is possible for the S&P to drop another 10% from current prices, because a 10 to 12% price drawdown from the current all-time high is definitely not something very special. So what do you think? Do you own any of these stocks, or do you have them on your radar as well? Let me know down below in the comments. If you found any value in this video, hit the like button, share it with your friends, and don't forget to subscribe to the channel so you don't miss out on future updates. Thanks for watching. Goodbye.